Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the euro currency. So today we have just minimum changes compared to weekly analysis. So one thing that we've got right now is that our bearish context, bearish scenario has not been formed. So if you will take a look at the hourly chart, I will show a bit later, market has not dropped below the levels that we have specified to confirm the bearish context and actually keep going higher and keeping valid minor ABCD pattern to the upside. This absolutely doesn't make impact on the daily chart, and if market even will reach the level that we have and we will specify it in lower time frames, it will not change the situation on the daily chart because price action anyway will stay inside of this recent collapse, recent downside action, and outside of this flag consolidation. It means that in general downside tendency, downside context will be valid. It could impact only on the point where we could consider taking the short position. Now speaking about slightly tricky situation of the coming Fed meeting. So as you know, the mostly market expect that there will be no rate change in September. But personally, I see a couple of problems here. First of all, Fed will have the pause in October, so next meeting will be in November. The price action on the crude oil, as you can see what's going on. I'm not even speaking about gasoline and the diesel fuel. It's just moving just right to the sky. So if they will not make any action this month, in the next 2 months, CPI could go out of the control under the background of the just explosive rally on hydrocarbons. And I suspect that I'm not sure this will happen. Maybe it's not the case, but I'm not excluding the chance that Fed could try to act in advance. So they will raise rates in September just to make impact on inflation, taking into consideration the performance of the fuel. So it's just my suggestion, but well, as we have shared with you in the Telegram, BlackRock and some other big banks suggest that it's not as obvious that Fed indeed will keep rate stable. They could actually change it. So, and I wouldn't be so sure that we will get no change on Fed in September. That's just a few moments. As you can see on the background and the current performance, it seems that market is preparing for pause in September because euro currency is raising, although it's no really good background for any upward action. It means that speculators are just preparing for some more dovish comments from the Fed. And it might be really, well, it's really a difficult situation on the market. It's just because if Fed statement will not correspond to expectations, you can understand what will happen. It's just euro just will collapse. So from that standpoint, it's a really very, well, maybe tricky moment with the position taken, and it's not suitable for everybody because I suspect that volatility will be really significant. It's only the explanation why actually you could see the performance on the euro currency to the upside here, this recent jump, although we thought that euro could turn down right from here. If we take a look at the interest rates, this is indirect confirmation of our thoughts. Take a look what's going on with the rates. Market just has formed a reversal session on last week when the big bulk of data had been released, and supposedly if Fed intends to take the pause and in general turn to the stable rate in the nearest future, it should keep going lower. But this hasn't happened. Right on the next day we've got the Polish grabber. It has been completed with a spike up, and now market is not dropping anymore. So this is indirectly, well, maybe not support my view, but it just tells that something is going on around it. And overall, on the treasury market, this type of action right in well, inside of the day. So if we take a look at the hourly chart, you could see what has happened yesterday. So this type of the performance on the treasury bond market is absolutely unbelievable. So when rate just jumped from the 33, 35 area to the 44, just within the 1 hour, even faster. It means that, well, some kind of liquidity or nervousness on the market is becoming thin, and it's actually not a good sign. All these things makes me suggest that probably Fed meeting might bring some surprises. So what we could do in the current circumstances? We should keep an eye on this area. Whatever will happen from the technical point of view, this is still our vital point. First of all, the confidence around 107.20 area, 107.16, 107.27, and the border of the flag, daily flag consolidation. It comes right there. So market should not break it up to keep the bearish, short-term bearish context. If it will happen, the upside breakout, and you could see what we could get. It might be hand and shoulders, as usual, some kind of the AB sitting more significant upward extension, and so on. That's why the last level where we could consider taking the short position is right there. And it's very great that actually market now is coming higher on expectations of the dovish Fed statement. It means that we could keep an eye on this target. It's 107.05. This may be slightly higher with the confidence, as I said. So XOP will be touched. We could start watching what will happen on the hourly chart, what the patterns will be formed. Scalp traders here probably could try to take the long position with the target somewhere around 107.05, 107.20 in this area between the XOP and the confidence. So that's potentially the area where we could consider taking the short position, but this decision might be tricky, and well, it depends on a lot of different factors that we can't control, unfortunately. But in 2 words, that's the trading plan that we theoretically could try to use. So first of all, watching for touching of this target, completion of the XOP, moving right to this strong resistance, and keep watching what's going on around it. If we get some clear bearish pattern where we could place tight stop, then theoretically we could try to take the risk and take the short position in anticipation of maybe not as dovish statement from the Fed. Besides here, if market will reach this level, stop could be placed relatively tight, so it will not be really big loss if we will be wrong and just market will break it up. Another advantage is that actually it's very clear that some kind of the vital point. So we not need trying to hide the stop somewhere above this area or whatever. We could place it relatively close, and just now let's keep watching what will happen and when the market will reach this area. For the bulls, I do not see good background from the 4-hour time frame chart on the daily chart. Only if you're a scalp trader trading on the hourly chart, theoretically you could consider taking the position with the target right there or around confluence. Although, as you can see, not a lot of time left to this moment. So that's all the euro currency. Let's keep watching.